One of my young clients the other day called me with all the excitement and he said, Anand, I've made 40% in this particular stock. Isn't that impressive? I said, of course, the returns are awesome, but it doesn't make any sense to me till the time I know the weightage of this particular stock in your overall portfolio. Hi, my name is Anand Kerathi. I have over 18 years of investment management experience managing HNI Wealth. This particular client had invested about 2 lakh rupees in this stock. It generated him 40% and he was not a very regular stock investor and therefore very excited. To my question on weightage, he said it is about 0.25%. Yes, just 0.25%. I just asked him one question. What if it doubles from here? Does it have any major impact on your overall portfolio? He was absolutely amused and shocked. He said, then how come you can generate high returns on my portfolio? How did you do it? For the first time in 6 years of our relationship, he had asked me a technical question. I was very happy about it. And in this video, I thought I would share my conversation with him in detail. Please do watch till the end. Point number 1, do your homework. Concentrate on the research. Portfolio creation and management is an art in itself. It's not like you buy the top 5 mutual funds and top 10 stocks and the portfolio is created, not at all. You need to find a common thesis. You need to create a thread behind your investments. You can ask certain questions. The questions can be, what will be India's GDP? What will be the impact of inflation on your portfolio? Now that you have answered these questions, then you can think, should I then build a cyclical portfolio or a defensive portfolio? Which are the sectors that I should be heavy on? What should be my split between equity and debt? Should I buy now or stagger it over the next 3 months, 6 months, 10 months? Never know. Now that you have answered these questions, you can then build a portfolio around the common thread or the thesis that you're building. I know as an investor it may be a little overwhelming and therefore you should hire an investment manager who will do this job for you. Point number 2 is focused investing. This is my favorite style. Now that you've identified the theme or the thread or the thesis with which you want to build a portfolio, please analyze those investment avenues or funds that can help you match the portfolio to the thesis. Please stop here. Don't end up building a very diversified portfolio. No, build a concentrated set of portfolio. If it is only mutual funds, then maybe 4 or 5. If it is only set of stocks, then maybe stop at 10 or 15 stocks. You may think, oh God, this is a very volatile portfolio. It's a very high risk portfolio. But please remember, a high conviction investment with the right size of diversification generates a portfolio which can give you very high return at a much lower risk. You may think how? There has been enough research done already. And there is a theory that proves that a portfolio of more than 15 stocks will not give you the same style of diversification as with a portfolio with less than 15 stocks. Then why overly diversify? One another way of increasing the portfolio returns is by being proactive in your allocations. This has worked very well for our investors and this is different from asset allocation that you would have heard of. And by being proactive, it doesn't mean that you have to sell or buy every day. You just have to keep an eye on various trends that are emerging in the market. Either they are opportunistic in nature or they clearly show red flags. Use that opportunity to buy or exit. The opportunities can be in the form of sectors. It can be in the form of theses or themes. It can be in the form of market cap. For example, if you see that there's a big opportunity in banking funds, just go and add that banking fund in your portfolio or add bank stocks in your portfolio. One another way of being proactive is by splitting your portfolio into core and satellite. Core is a portfolio where you expect very low churn because these are the foundations or pillar of your portfolio. They are very long-term in nature. On the other hand, satellite portfolio is a little more opportunistic in nature, a little more tactical in nature. You use satellite portfolio to make good some short-term opportunities, which can be 10 quarters, 5 quarters, 6 quarters. And therefore, a core and a satellite, when they come together, create a portfolio which is low on risk and high on returns. Point number 4 always gets me into trouble. It's very controversial. The suggestion is to buy, hold and exit. I'm by no means saying that buy and hold is not the right strategy, not at all. All I'm saying is that based on my experience, I have realized that all the assets go through market cycles. You need to keep an eye on where exactly are you on the market cycle. If it's at the beginning, then go big. If it is very normal, then you may want to go a little small or just stay invested. And if it is at the end, it may be risky. Therefore, you may want to offload some or all of your investment. See, in investing, everyone plays different games. Everyone has their own objective. So therefore, the portfolio should represent what you are comfortable with. The portfolio should represent you. It reflects you, not someone else. And therefore, you should not listen to some random person who comes and advises you to buy, sell these stocks or funds without knowing you. Point number 5 is important not just in investing, but in life too. Please stop listening to doomsayers and these commentators. Negativity sells, everyone knows. And therefore, don't panic when you see words like market plunges 500 points. Plunges? 500 points? What kind of words are these? We all know markets can come down anytime by 15-20%. We should all be prepared for it. And if these words make you worry and sweat, please don't invest in equity. And if you want to invest in equity, stop listening to these doomsayers and commentators. Simple as that. Good. Now that you've built the portfolio, identified the theme and mastered it, please do periodic reviews. Look for opportunities or warning signs and make the necessary changes. If not, continue and enjoy the profits. But please don't listen to these doomsayers. Coming back to the client who's a head of cloud for a very large IT firm, he jokingly said, "Anand, I'm going back to building my next big cloud platform. You please manage my money." An expert should do what he is an expert in. So this Dussehra, my request is, let's stop listening to these noises. Let's build a very strong portfolio. Happy Dussehra, happy festival and happy investing.